Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright. Here we got our more cracking chart, 4 hour, and let's see what happened last video. Let me see. I made a video right here talking about the move up, and then made a video right here talking about the move down, and put in a bunch of shorts on Bitcoin, Ethereum, XRP. Yeah, so, and then we were basically looking for the purple neckline right here to break of the head and shoulders pattern so we could get our completion, which would be the measured move right here. But in the meantime, you could also have seen it as the neckline going like slightly slanted, like diagonally. So technically like the break was here, and then confirmation was like the retest and then sell off, in which case like the initial dump and then this candle before it closed had already hit the measured move. It was obviously very important once we like traded sideways out of this range, and we were putting in essentially like a Wyckoff distribution pattern. It was clear that we were going to get the dump out of the pattern. I waited till last minute to release the head and shoulders video just to see if it popped up anywhere else like prior to, which it did not. So that further reinforces my suspicions. But anyway, so we have our basically like one pattern developing into the next. So we had talked about how we essentially put in the atom, the sharp point, like a V-shaped, and then the eve, which is like the round or like the cupping shape, the rounding off, and then like slow sell-off. So when we essentially, that's like a double top pattern. So when we get that double top pattern, as soon as we validate the head and shoulders with the break of the neckline, we essentially like validate this pattern. Now before we can actually like validate, like trade it, if you're not already in a position, what you're looking for is a break with confirmation of the neckline. So now the break of the Adam and Eve neckline is going to be the yellow line here. So when we sell down here, I mean, it's not just going to dump down in one candle. We'll bounce around here. Essentially what happened is we sold down, we got the retracement up to the 236, got rejected, and now we're selling down below it. So what I would expect to happen now that we've broken this purple trend line, and this is the exact same thing we did previously too, when we moved outside of our trend line, we basically moved outside of it and traded sideways and faked out the whole market and then dumped. And that's all we're doing now. We moved back above like the breakout trend line. Like that's like essentially like it's just a massive fake out. Because once you trade outside of this, people will take a trade on the retest, assuming it's going to go to the upside, and then obviously they just dump it back in. They're trapped in that position, and then it provides like extra selling to the downside. And I do want to just help people to understand a little bit more clearly. You'll see I have multiple patterns drawn right here. I have essentially like the fib channel in the background with the colored lines. I always draw that and always use it as like a guide basically, regardless, just to see how it's interacting. But the actual pattern that I have drawn here is the wedge. And the reason I have that is if you go on the 4 hour and you draw from like the wick down here and you just trace up the wicks on the way, you could either draw it with the blue line or the green line, depending how you were going, like off closes, off wicks, like, kind of like a zone almost. And then on the top, you could draw the purple, or the orange rather, same thing from the closes across here. And this to me was a false breakout. That was a false breakout like the whole time. That's why I've had it drawn like that, and I kept it drawn like that. And then I also drew, like you could, I guess, draw in something like this if you wanted, but again, it changes nothing and it gives you no usefulness. And my whole point here is that what you're looking for is a bunch of touch points to validate it. And the reason you're looking for multiple touch points is not so you can tell people that you're right. It's so that other people are seeing the exact same thing as you. So if you draw a channel like this, okay, like this channel right here, and you just stick to your guns and you say we're in a channel this whole time, and like you're just right because we're in a channel, and you just It's not about technical analysis other people do. You just know what you're doing. How useful is this channel to you? How useful is that? Even if you draw it so this and this touch, you have 2 touch points. So when did you draw the channel then? After the second touch point? So how much use is it now? 0. It's 0 use. Until we literally pop up to the top of the channel and then sell off, and then you go, oh yeah, look, we sold off at the channel. So it's literally no point to use this as a channel until it develops as a channel. Now if you want to keep a couple lines in here to keep an eye on what it'll look like if it turns into a channel, that's fine. But it's not a channel. Like, all it is just the retest of the support that you broke down from, and now you're finding it as resistance, and now you're like, you know, basically like just falling off a cliff, or rolling over, as I like to refer to it. But at this point in time, what I'm expecting to happen is essentially like this move has played out. We got the measured move down here, as you can see, for both of these, depending how you measure the head and shoulders. That's played out. So I would expect some kind of strength in here and essentially a bounce, like corresponding with the fib level. So I would expect us to get down at least to the 382, 58.50, retest, you know, the neckline of the Adam and Eve, and you know, get a bounce here, some kind of strength, you know, try to get back up to the 236, probably fall short, you know, maybe get rejected by this purple descending slope line resistance, and then, you know, probably head down to the 0.5. Now alternatively, we could just see a bunch of like selling pressure come in right now and just blast us straight down to the 0.5, in which case I would expect us to come back to the 382 and again possibly like up here. You know, but basically a confirmation of this neckline break, and again it's like same thing. You have like certain amount of people are probably going to look at it like this. So if we break the 382, or if we break down to the 0.5, depending how you're looking at it and what time frame you're on, you know, is what it's going to look like. So in this case, I think actually like I kind of like this better than the yellow one neckline. On the 4 hour, on the 1 hour, I think it's more clear like the other way, but typically I like to look at like the longer time frames. And I think what's going to happen here is we're going to come down here, probably dip into this zone in between the red and the yellow, like at the 382, and then we'll see that bounce back up here, you know. And that'll be a lot of people like myself. Just all it is just us taking profits, you know what I mean? It's not going to be like a big move to the upside and all of a sudden we're bullish again. It's literally just us taking profits on this move. Because what's happening now is a lot of people think that just this is retracing. So they're drawing like Fibonacci from here to here. Here, I can show you. This happens all the time on the fifth wave. It's the 1, 2 down, 3, 4 down, 5, and then when you go to retrace from here, a lot of times people will do the Fibonacci from this last swing right here and do the retracement, and then they get wrecked because they're not expecting. I'm going to turn this one blue. This is an amateur mistake that people make all the time. Look, it came down here to the 618 or the 0.5 and they got bullish and thought it was going to move back up and bought it. And that's why you see this bounce right here. But it's not. It's not going to get bought back up because we're retracing all 5 waves now. So you need the green fib all the way from the bottom. Because on the 5th wave, you retrace the fib for all 5 waves. But on the 1st wave and the 3rd wave, you only retrace for that wave, that swing. So from here to here, from here to here, and then the 5th wave is from here to that top right there, okay? And then you're going to fib down. But see, this is where everybody gets faked out because they're expecting it to stop at the 0.5 or the 618 in the golden zone. And then it sells straight through it, dumps, like down, like in this case to the 786, gets bought up thinking like, okay, it's just going to be like, you know, a deep retracement. And then next thing you know, it's going to come back down again to the 886, 382, and then you might see like a legitimate bounce off of it. But then all of a sudden you're going to take out this swing right here. And that's why I say, you'll hear me say it all the time throughout my videos, it's going to be very clear to the market what's really going on is we're not retracing this 5th wave right here. We're retracing like the whole entire move. So when we go to retrace the entire move, what's going to happen is we'll go between like, you know, our golden zone, the 382, which will be right down here, to like the 618. So essentially like 5100, you know what I mean, is like our primary target for a bullish retracement of this wave. You know, but we can make it down as high as like the 786 or the 886, which is very common in Bitcoin because what it does is it shakes people out at the last minute. And that's why you'll see people coming in to buy at the 786 and the 886 because it looks like it's about to take out the low, and then last minute it gets bought up and V bottoms and they'll move to the upside. So Not that I think that's what's going to happen in this case. In this case, I think it'll be a bounce at the 886, but I think it'll get sold into as we find like these previous levels as resistance. So, and you will see, like I said, at the neckline here, when we get to it, that's where a lot of people are going to take profits and expect that move back to the upside. So I would expect like a strong wick down here, and then it gets bought up or basically sold into, like everybody takes their profits, closes their positions, you know what I mean? And then as soon as it bounces, it gets sold into and dumps. That's when we'll get like the validation break of the Adam and Eve double top, and then we can get like our actual move down in here. And now everybody's getting super bearish, saying we're going to go to a new low and everything. I'm not necessarily going to take that stance quite yet. We're definitely still in a bear trend. We're definitely getting ready to retrace these 5 waves, in my opinion. We're breaking this down. We're getting the measured move. That's fine. But at this point in time, I think it's likely that we'll see a move off this 786, 886. And then it's also the 1.618 right down here of that, the 5th wave fib right here comes in right here at that channel support line too. So we're keeping an eye on all this. That's basically like the bottom of the channel that we've been interacting this whole time. So essentially, if we sold off down here, we would hit the 1.618 in blue, the bottom of that same channel that we like dipped out of, and we could even dip out of it again and do the same thing again and then get that push back up. And again, I'm just going to continue. We've been trading this channel the entire time since we topped out. Since we topped out, we've been trading this channel and it's been respecting it. One time it broke out of this channel and it still respected it as support when it came back down and did its own thing. And then when it came back down here again, it bounced for a second, but then completely disrespected it. Disrespected on the bottom, but it came all the way down to the 1.618 in blue of the channel. So it took the fib extension of the channel outside of it. And then bounce all the way, bounce all the way back in. And then if you look at it on longer time frames, it never closed outside that channel. It always closed back inside of it. So we hit the 1.618 fib extension, the blue of the channel right here, bounced back up, got one more push down here, and then created like our divergence and got like the actual bounce up here, okay? So I would expect the same thing to happen again. We sell back off, poke out of the bottom of the channel, come back up, consolidate, and then get that rocket move back up, and then attempt to test the top of the channel here, this diagonal blue line again. And again, we're just going to keep bouncing around inside this channel until we're not. Now the reason that we're bearish is because overall, no matter what, if you're trading this price action here, overall, in time, the price is going down. So that's why we say this is bearish. So we want to overall be taking trades to the downside. So there was like pretty much like 1 or 2 times ever in this whole trend that was like really worth taking trades to the upside. I guess you could say 3. There was definitely money made here, here, here. There was definitely some money made, but it was just so much easier to trade to the downside. So you take the easy money, and then when you're doing well on the easy trades, trading with the trend, then you can take some counter trend trades that have a little bit higher of risk, a little scalp, shorter time frame trades, and then take profits on those on like the quick little money makers in the meantime, or use those scalps to take profit on your overall like trending trades, like your shorts. So you might take like a buy or something like that to take profits on your short down here at the neckline, but leave your short open. You know what I mean? So you're essentially like you're like hedging your short, or like taking profits on your short. But yeah, that's it, guys. Everything's playing out just like it's been playing out. We would expect it to continue playing out until it doesn't. The market has been very predictable lately. It's not always going to be this predictable. So this whole move has been very well like orchestrated, basically since way back here. Really since before that. Man, this whole thing has just been so methodical and so orchestrated, and all the news and all the this, that, and the other FUD and good news, bad news, whatever in the world has changed absolutely nothing when it comes to the technical analysis. And that's why I say that I feel like the market makers in this market know what they're doing, and they are like some serious like bot-driven algorithms that are dictating like all the moves in these markets. So as long as we can stick with these like whale bots that are essentially like determining all these moves, we're just going to keep swimming in their slipstream and keep swooping up these profits. I mean, this is easy money right now to the downside. So if we can keep building capital right now and keep learning as a community and growing as a community, and getting our trading plans more efficient and more effective, and eliminating some of that like noise in the background, from other analysts or other traders, or social media or your family, whatever it is. Eliminate a little bit of that noise, and focus in, and we can really hone in on what's really happening in these charts, and it becomes clear as day. Like I see people ask me how I do this, and joke around that I have a crystal ball, and it's not that. If you do the same thing over and over again, if you pick like a life skill or whatever, like you're a tailor and you just like all the time are just making fly suits, like you're gonna get really good at like making real nice suits, or whatever it is that you do. You know what I mean? Like if you're flying airplanes, 12 hours a day or whatever, like for 20 years, you're gonna be phenomenal at flying airplanes. And trading is the exact same way. Come in here, you put in the work, you put in the hours, you study, you read, you grow. Problem with a lot of people is they reach that point where they're profitable, or they're doing well, or they're profitable for now, and then they like plateau on learning. You should never plateau on learning. Even if you're crushing it, you should always be looking to be more efficient and more effective, because that's what allows you to really enjoy trading. Once you can be profitable on trading and you're confident in your trades and you don't have to stare at the charts all the time, you can like go about your normal life, be confident in your trades, have like a regular enjoyment of things, and know that there's always going to be another move, that you did the work, you put in the analysis. If it plays out, it plays out. If it doesn't, it doesn't. But the trade's there, and if you're wrong, another setup's coming, and if you're right, that's great, another setup's still coming. So there you have it, guys. Everything's been playing out phenomenally. I would expect us to pull back down here to one of these key fib levels, and then find support here on the neckline, and then see how we're going to break down from this Adam and Eve double top, or are we going to find support here and rip to the upside, because all this QE money. But I doubt it. At this point in time, I mean, you know me, crypto trend trader, trade with the trend. I'm bearish until we're not. There it is, guys. Technical analysis on Bitcoin, and I'm at it. Oh, what was there something else I was gonna do? What was it? Oh, the divergence too. We were talking about that divergence the other day, and the resistance support on the RSI and everything. And look at that RSI. We got the breakdown from it, but then it was like coming back up, and that was like the retest of the break. So I entered another short right there, actually on Ethereum, and then we got the dump. Ethereum actually didn't dump as much, so I was kind of like, what the heck? And then all of a sudden it did. And then also, just like we said on the stochastics, it was the exact same thing. We didn't get as much of like a powerful like attempt up, but then we sold off. And then here we're doing like our coil. This is like a typical fake out. Like it looks like we're about to fake out to the other way. So you're going down, it looks like you're about to go up, and then you fake back down. Same thing. It looks like it's about to go up, fake back down, and then we'll get the actual move back up. So this looks like it's like that fake out move. You see how we just took out the low. And then same thing with the MACD. Look, it was rolling back up here, and it looks like it was about to go up, and we are going to get that next green one for the divergence. And then bam, the divergence just played out instead, and it just straight dumped. So that was like absolutely beautiful. And we were paying attention to this too on the Coinbase chart. They were basically like finding support still on the Coinbase chart on top of that that downward sloping support line. So we are still kind of above that. So maybe that's like a little bit of bullish hope. But you could see here again what I was saying about we sold back off to like the 618 in blue, and that's like people still thinking like we're going to retrace off the 618, but in all reality what we're probably going to do is get rejected by the 236 and come down to the 382 in green here at the 5764. So that's my next move, but we are pretty oversold, and all our oscillator indicators are pretty worn out. We are very close to that neckline, so I'd like to see just like one more powerful move down here, and possibly even divergence start building. We'll have to see what it looks like, and then we can get an idea there. Also, be very careful too. I hear people talking about how we just put in a higher low, so this is bullish, but that's not what happened. We had a low, we put in a higher low, we put in a higher low, and then we put in a high here. This is like the same high, and then we dumped off here, but we haven't formed a swing yet. There's no swing off this yet. So we can't say we're putting in a higher low yet, because all that's going to happen is we're just going to sell off down here and get to like another level, and then this is going to be very clearly not a swing. It's just going to be like one of these little moves inside of the actual move. It's just like a little bit of a bounce. It's people taking profits off of like a key resistance slash support level, and then when it bounces, you re-enter your short. You know what I mean? So then it dumps back down, and then you get like the actual. And you know that's why the whole thing is stair steps or like a pulse. You know, it doesn't just go straight down because not everybody's just like, oh, I'm gonna just short it to zero, or oh, I'm gonna just long it to infinity. You know, you take steps along the way and you take profits and everything. At least you know good traders do, obviously. So, but there you have it, guys. Crypto trend trader, and I'm out of here.